Did you know that Apple is worth more than the entire stock market of Australia? And Australia is one of the world's wealthiest nations. If you're an Australian wanting a slice of that apple pie and considering investing in the US market, there's a few things that you need to know. Today's video is a much needed video ensuring that you have solid foundational knowledge in what it means to own a US share as an Australian, so that you can actually make an informed choice when you do go to pick that platform. We are going to go over the benefits of adding US shares to your portfolio, how to minimize fees and maximize zero brokerage platforms, and we'll finish with arguably the most important part of the video, what you need to know about taxation of US shares and the role of currency when investing in foreign markets. Hey, I'm Magella and welcome to another episode of Money by Magella, your weekly go-to for a chat about investing, budgeting and business all over a drink. If you're new here, be sure to subscribe for some weekly fun and to join me on my journey to becoming a millionaire by 30. So grab your drink, tap that like button and let's get into it. The US stock market is home to the world's largest and most dynamic companies, such as Apple, Nike, Disney, Starbucks, Amazon, Google. It also houses the new greats, the emerging new tech firms such as Uber, Beyond Meat and Alibaba. So with this lineup of globally dominant companies, it's no wonder that so many Australians hit that like button and want a piece of the American market in their portfolio. Whilst it was previously really hard to break into the US market as an Australian, times have changed and the niche online brokerage platforms are focusing on the world's biggest market, making it simpler and more affordable than ever for Australians to invest in the US. And on that note, it's really important that you do your own research because after all, I'm just a gal on the internet, I'm no financial advisor, and this little chat here is only for entertainment purposes. So be sure to use this video as just a basis for your own research. The very first thing that you need to think about is whether you're going to be a trader or an investor. Will your activity in the US market be part of your long-term investment strategy or your short-term? If you're not sure, I definitely recommend checking out my video that I'll link above on long-term investing versus short-term investing, as it will really impact which shares and which platforms will be suited to you and also how you'll be taxed. So, why should you consider adding US shares to your portfolio? If all of your investments rely on one national economy, then even though you have a variety of shares, your portfolio may not be as diversified as you think it is. Accessing the US market provides you with opportunities that we just don't have in Australia. Most of the companies on the ASX just can't meet the pervasiveness and the scale of US-based companies. I mean, just think about your daily life. Many of you would be listening to this on your iPhone, which is an Apple product. Most of you would have found it through Google and liked it and subscribed to the channel via YouTube. We were both owned by Alphabet. This morning you probably had cereal made by Kellogg's whilst scrolling on Facebook or Instagram. The last online purchase you made was probably from Amazon using PayPal. Each of these companies are US-based companies, but they are so integrated in our lives here in Australia. They have such a global dominant presence that most Australian companies could really only envy from afar. If you want to purchase any shares from individual companies, you can do so on a trading platform like Etoro. I'm just going to be completely transparent with the platforms and the strategies that I use and that I find are working for me. I personally chose Etoro mainly because I don't like paying fees and they offer a zero commission. So for me, it was a no-brainer. On top of that, my investing strategy involves fractional shares, which is something that Etoro and not everyone else offers. So if I don't want to have to wait until I have $3,000 saved up to buy an Amazon stock, I can go through Etoro and buy just a small portion of a share for $50. If you wish to sign up with Etoro, the first 10 people to use my affiliate link below will actually be gifted $100 from Etoro. So something to keep in mind if Etoro was something that you would consider. If you want to do some more research into the different trading platforms, definitely go ahead and do that. I actually will be publishing a video next week on all of the different trading platforms available for Australians to invest into the US market. So definitely subscribe and hit that notification bell so that you can be notified when that comes out next week. Okay, so that's investing in individual companies, but the way to diversify your portfolio even more is to invest in something called an ETF, which is an exchange traded fund. US-based ETFs will give you access to a range of companies listed on the US market, and it will give you a really nice broad exposure to these markets. Basically, a US-based ETF will cast a really wide net across the US market, and then it will package together a grouping of US shares into one tradable product. The ASX actually lists US-focused ETFs, and so as an Australian you can access these ETFs in Australia on the ASX. However, it's not how I did it. Instead, I opted to invest in ETFs directly on Wall Street via the app Stake. I'm also not sponsored by Stake, but I just really want to let you know what I found works the best. So with that in mind, I chose Stake because it offers zero brokerage with no hidden fees. Even with the foreign exchange fee, it still works out to be cheaper per trade than trading with any other brokerage. Stake also lets me trade ETFs with fractional shares, which you actually can't do on the ASX. If you want a detailed description and breakdown of all of the fees and details of Stake and other trading platforms, we will go through all of that in next week's video. Definitely worth mentioning though that Stake is currently running a promotion where if you use my link below, we will both get a free stock, and that free stock could end up being Nike, which is valued at about 150 Australian dollars. So definitely check that out if you were thinking about using Stake. But before you go jumping into any trading platforms, I still need to let you know some fundamental basics about taxation when you are buying US shares from Australia. When you invest in the US stock market from Australia, you are investing in foreign entities, and as such there will be tax implications. The first is that US shares aren't subject to the dividend imputation system. And so to explain, companies are taxed 30% of their income, and a company often pays dividends out of their overall income to their investors. As an investor who taps that like button for the YouTube algorithm, this dividend will be added to your taxable income. And so in this scenario, that dividend would have been actually taxed twice. So to avoid this double taxation, in Australia we have something called the Dividend Imputation system. A company will give you a franking credit which is attached to the dividend. The franking credit represents how much tax the company has already paid on that dividend, and so it can serve to reduce your tax depending on your tax situation that year. But US shares are not subject to the dividend imputation system, and so you won't receive any franking credits from your US dividends. The second is that the US has different rules to Australia in terms of how the government taxes dividends. As an investor in the US share market, you may be required to pay a 15% withholding tax to the US government once you receive your dividends. Normally this can be claimed back at tax time, but I definitely recommend checking this with your accountant. Third is, as an investor, you will be subject to capital gains tax. So any profit you make from tapping the like button, subscribing and selling your shares will be added to your taxable income. If you hold your asset or your share for more than 12 months, you will receive a capital gains discount. Additionally, it is important to be aware that your actual returns may differ in reality from what you see on your portfolio. The reason for this is that US shares are traded in US dollars. And so when you sell your share and then convert that profit to Australian dollars, your return can drop quite significantly. And it all depends on the US Australian dollar pairing at the time that you do the conversion. So currency fluctuation can definitely play a significant role in your investing if you are using foreign investments. I really hope that this video has added value to your research into investing in the US stock market. As always, if you have any questions, please just leave them in the comments below and I'll be sure to respond. Show the like button some love and subscribe to hear more content on investing. Honestly, it means the world to me, every single one of you that like the video and subscribe, and it really helps the channel out. Good luck with your research, and I'll see you next time for a drink and a think on all things finance.